I know this panel is big, but the way I've grouped this panel is in rough categories of growers, investors, distributors, and acquirers. And just so our panelists get an insight as to the rough makeup of the group in the audience, can I see a hand of how many people in the audience are active in starting their company, looking to start their company, or active in a startup in this space? Great. And just a word about the way the process is going to go this morning. We'll spend about an hour plus having it be directed questions at our panelists by me, leading them in a conversation about the space, and then we'll open it up to about 30 minutes or so of questions and answers. We are streaming live, so please speak clearly, and I'll repeat the question for our panelists. I wanted to start this conversation and lead our discussion of food and technology on this space, and really what we're looking for the panel to sort of get into is what are the opportunities in this space for entrepreneurs and investors? We've seen the reports of about $350 million has been put into the space by venture capitalists in the last year. That's up from about under $50 million in 2008. While that's a significant increase, that represents about 1% of global venture capital investment. But we're looking to see what are some of the technologies that have been exciting in this space, where is it going, how big is it growing, and where are some of the challenges that will face entrepreneurs and investors along the way. So to start it off, Scott, love to talk about Hampton Creek Foods. Was your first, or was Founders Fund first investment in the space? What drew you to the Hampton Creek Foods investment, the technology or the team? And then I guess a little bit back, and taking a step back, is how did you approach the market generally in terms of the food business and the market potential?
Yep. Can everyone hear me? Yes. All right, so I'll start with the second half first, and the way that we think about investing in companies generally, and it pretty closely applies to all food-related or industry-related startups. So the basic framework we take for most investments is, is this a huge opportunity, first of all, and then second of all, is there a way where this company has really long-term pricing power, where it can be, a very durable, profitable company that potentially could return our funds. So that's the basic framework we apply on Hampton Creek Foods. We think of it as really a technology company, and so there we saw that there were technology advantages that we thought were very difficult for others to copy. But more importantly, this was one of the first food companies that we encountered where they were producing something that was better and also cheaper. So it was really more for less and not less for more. And less for more can work in certain niche markets, but if you want this to be something that's completely mainstream and can transform entire industries, then you need more for less. And so they've gotten that, and then on top of that, their business strategy of starting with something like mayonnaise, where they could produce a cheaper product that could go mainstream. That was like a big thing for us, where you start with a smaller market where you can really own it, and then you move on to the bigger ones after that. And you've seen that they're now doing that, starting with mayo, going towards an ingredient innovative products, and then ultimately replacing eggs directly.
And then James, thinking about the Plum investment, how did that fit into your portfolio and your strategy? And then looking at Plum, because you're pretty active in this space, how does Plum fit into the rest of the portfolio companies you have and expectations you have for their exits or growth?
Well, a couple of thoughts there, Amanda. Quick background, when I first invested in Plum, I was actually at a different venture firm called Bridgescale, and my now partners, Jed Smith and Tori Patterson, brought me this kind of pre-revenue organic kids nutrition company, and I was at a late-stage tech firm, and somehow convinced my partners to let me do the investment. They're now glad that I convinced them. And this is back in 2008, and I joined the board and helped build the company, and then a little over 2 years ago, joined Catamount Ventures as a partner. It's kind of how I got to know the firm. And the the way we invested in Plum is very atypical and unusual and kind of breaks a lot of rules. I mean, my now partners built an investment thesis that there was a missing piece in the puzzle of the shelf in terms of healthy organic choices for modern parents. And Walter Robb, the co-founder of Whole Foods, is an investor in Catamount. He was a part of that in terms of telling my partners, hey, I don't have enough choices for kids food and for baby food. At the time, there was only one organic baby food brand. It was overcooked fruit and vegetables in a glass jar. And so we basically seed funded a business and backed two amazing entrepreneurs that had come out of Cliff Bar. Cheryl O'Loughlin, the former CEO of Cliff, Neil Grimmer, the former Chief Innovation Officer of Cliff. And what got us really excited was this authentic mission that these founders had, where they really wanted to take on childhood obesity and kids' nutrition at a global scale. And they had a really big, audacious vision to kind of create the next Kraft, the next trusted brand for parents. And we felt that Kraft no longer was a trusted brand for the next generation of parents that wanted to feed their kids high efficacy, all natural, all organic foods. So that's kind of how it began.
And then Deven, for the entrepreneurs in the audience who may not be as acquainted with White Road Investments, how do you distinguish White Road in the space from the other venture funds or from other investors? I mean, are you looking at different investments? Are you taking a different approach than other venture funds?
Yeah, I would say that we're a little bit different just in terms of our background. So White Road Investments was founded by Gary Erickson and Kit Crawford from Cliff Bar Company. And it started in 2010, and it was primarily developed to create a partner, a venture fund that Gary and Kit wished that they had when they were building Cliff Bar back in the day. Somebody that can partner with them, not just with financial capital, but also with expertise around sales or distribution or supply chain or branding. And so that's what we try to do is help people with all of those aspects and get very involved in the day-to-day operations of the business and kind of guide them through that slope from $1 million of revenue up to 20 million when, frankly, a lot of mistakes are made. We've made a lot of mistakes, and we hope that we can share with people and make sure that they don't make the same one. So I'd say that we're different in that sense, that we're operators first and financial providers second. And then beyond that, we also look for companies that are mission-driven. So similar to the way the Cliff Bar is mission-driven, we don't have just one bottom line. We actually have 5 bottom lines. It's sustaining our people, our planet, our community, our business, and our brands. And we think that by focusing on all 5 of those, you have a much better outcome in the long run. It's not, you have a much better financial outcome for sure, but it's a much better outcome for everyone involved. And so that's what we try to nurture, and we look to partner with companies that share that same vision.
So shifting away from our investors to the grower side of things, Tony, can you give our attendees sort of a snapshot of what the hybrid seed business is? How big is it? Where does it reach? What does it mean? I think probably some of the attendees would need a little bit of primer on this. So can you walk us through that?
Can you hear me? I think you can hear me. Yes. Are there any farmers in the room or people who want to get into the farming and bring in food? Great. What basically, I'll just talk to you. We're a technology company in the sense that we're working on plant breeding. Our company looks for talented plant breeders around the world. We look for plant genetics. Just as a primer so everybody knows, we're just doing vegetable seed. There are 2 big worlds in the seed business. One would be agronomic seed, corn, soybean, wheat, rice, cotton. Think of the big crops. When you see a giant field, usually it's not tomatoes and peppers, it's usually cotton or rice or something like that. We do vegetable seed, which is another side of the business. The GMO things and all the things you read about in the newspaper that some folks don't like are all being done on the agronomic side. All of the work we do in vegetable seed is done with plant breeding. We basically take what Gregor Mendel came up with and we've developed it much further. We do use biotechnology. We look inside the DNA of the plants to select plants that we like. We don't modify the genes, we don't change anything, we just say, oh, okay, you qualify, you have a bright red look, you've got disease resistance to bacterial wilt, you have this or that, and we basically breed plants that way. We work in major species, and hybridization basically means, so that everybody understands the difference, because it's critical to how this business works and why this is an IP business and a technology business. There is no terminator gene. If you use a hybrid, you can save the seeds and they'll grow and they'll work fine. So there was a terminator gene developed by the Israelis 30 years ago, but no one uses that, and it's a bad thing, and we certainly don't use anything like that. Basically, hybrids are just, if you think of cattle, my family, I came out of the cattle business, and still family business. You breed animals to get the hybrid that you want, and you fix that hybrid. With plants, it's very similar. We take lots of parent lines, males and females, and we start breeding and selecting, and then we get the perfect father and the perfect mother in terms of, say for example, in a tomato, we want a particular shape for the processing industry in California or Turkey or Italy or China, and everybody's different. They want a particular shape, they want a particular level of sugar or grits, they want a particular type for their processing plant. Same thing's true for peppers and every other vegetable you can name. And so we select for that, and then they say, well, in our region we have a horrible problem with this disease, or we have a problem with water. We want something that's maybe a little drought tolerant, or we have a problem with too much sun, so we need something with a lot of leaves on it. So we select for that. And then we take the perfect mother and father, we select the hybrid, and out of that tomato, we crush that tomato, usually in some place overseas, not always, we produce all over the world. You take that, you clean that seed, you treat it sometimes with various chemicals to make sure that it catches no disease between the time that you're selling it and the time the farmer plants it. In many cases, you coat it. We sell to the Middle Easterners and to the Africans where there's very, very hot soil that can kill the seed and keep it from germinating. We'll often coat the seed in clay and color it so the farmers can see it. Make it heavy if they're planting in a windy place like Western China where it blows away before they can get it in the ground. We'll take lettuce seed and onion seed, which is tiny, and make it heavy with clay and make it colorful so they can see it. And so when they drop this expensive seed on the ground, they can find it. And then they plant it and it grows and they get the crop they want. And because of the fact that it's hybrid, they can save that and they can make their own seed, but they're not going to get the perfect child that we've created. They're going to get maybe Uncle Bob tomato or Aunt Lucille the tomato, and maybe they're not very nice. And then maybe they don't have the disease resistance or the color or the shape. So we work with professional farmers, and we also have recreated by taking heirloom vegetables and making them better, making them disease tolerant mostly through hybridization, not changing them. So if you want a big boy that your dad planted in the backyard garden in 1965, you can get that and it'll grow. You can actually produce an entire crop of heirloom vegetables and they won't go down to disease like most of them will in most parts of the world where there's disease pressure. So that's basically the difference. When you hear an open pollinated seed, that means a seed that's pollinated by bees or flies or by the wind. In our case, when we make a hybrid, we pollinate the female plant with the pollen from the male plant. And we do it by hand. And it's very expensive. And it's pretty interesting to watch. So that's the primer on the seed business.
That's interesting. Just so you guys get introduced to all the panelists, Rob, you left Google to start a food startup. Why'd you do it? What drives you? What keeps you going? And then also, for your technology background, how does that play a factor in how, does it play a factor in how you run the business and that technology expertise?
Great. Wow, that's loud. Thanks for having me. Actually, before getting into technology, I was working on a farm. And I think what you see in farms today in this country, especially the small farms that are trying to make their businesses work by selling direct to customers at farmers markets or with CSAs, and actually it's not just farms, there's ranches and bakers and all sorts of food businesses that I saw when I was on the farm and that you see here in the Bay Area everywhere. There's this growth of high integrity food businesses that are making food in ways that are sustainable, environmentally, in ways that are healthy. They're selling it direct, and that's initially what inspired me and the GoodEggs team, is that we saw all these folks. They're starting small businesses. There's tens of thousands of them across the country. They're doing things with integrity, and it's still really hard to make ends meet as a small farmer, as a small rancher. There's so much friction in getting to market. There's so much friction in finding the right customers and in doing that direct sale, or in selling through the traditional channels, because right now the food industry is really controlled by the industrial supply chain. And for folks who are trying to operate outside of the industrial supply chain, it's really difficult. And so that was our initial inspiration, was how can we help these folks? How can we help them grow their market? And it seemed like there was probably some technology that we could bring to bear to help make these markets more efficient, effective, to help people find customers. There are certain things that technology is really good at, and facilitating a distributed marketplace is one of them. And that's essentially what's happening in local food today in this country. I guess I should not take for granted that folks here know about this local food phenomenon, but it is a phenomenon, the local food phenomenon. It's growing in this country. It has been for decades. And so the goal of GoodEggs initially was, what inspired us was, hey, let's help grow these local food systems all over the country for the benefit of these small farmers and food makers. I think what we realized when we started getting into GoodEggs is that we're not building a technology company, we're building a food company. And as technologists, I think that there's maybe a few benefits that we have in approaching the space. One is just hubris, and that thinking, oh, technology can do anything, and so we're tackling really hard problems that are pretty scary. The second is that we use technology in everything we do. We have a big food warehouse where we're moving lots of perishable food around every day, and each piece of the warehouse process is powered by technology. Each piece of the retail process is powered by technology. There's actually a number of pieces of software that we're building in parallel, but it's not a software company. It's a food business.
Janica, I'm going to turn to you next about giving some quantification of the numbers that we're seeing on the exit side of things. In terms of deal size and deal flow, have you seen an uptick in acquisitions or acquisition numbers, or have there been really changes, and where do you see this going?
Sure, I think reflecting what everyone else has said on the panel, there's just remarkable interest in food, and it's up and down the supply chain, and it's from the venture capital community, it's from strategic buyers, it's private equity, it's retailers, distributors, brokers, everybody wanting to be part of food today. It's a very consumable product, huge markets with huge supply chains. So we have seen a ton of deal activity. In the last year, actually, I think more of the deal activity has happened at the smaller scale, and it's not for lack of interest, it's just lack of companies coming to market and raising capital. So I think part of the question was that Amanda initially asked was, how do some of these food exits compare to tech? And I'm not a tech banker, so I probably give you a very lopsided story, but overall, if we look through our entire database, the median enterprise value of companies that are getting acquired or invested in, and of course this is biased by transactions that are actually disclosed, the value is about 150 million. But to tell you how that's sort of affected by deals up and down the spectrum, if you look at the biggest transaction that's been done, it was the take private of Heinz for $28 billion. So I think that rivals any tech deal that's been done probably in the last 5 years. But if you start looking at what's really happening out there, it's the GoodEggs of the world. It's Hampton Creek Foods. It's this convergence of food and nutrition and maybe a little bit of technology and local food movement and what it means today to be healthy and good for you that I think is attracting the most attention.
Tell me, just so we get an insight into the numbers involved in hybrid seeds, what is the sort of global market for hybrid seeds, and what are some of the metrics that that drive a successful business from the financial side of things?
Right, the global size is right now about 55 billion. It's growing very quickly for two reasons. One, the shift from open pollinated to hybrid seed is happening in the developed world. If you look at a typical farm in the United States or Western Europe or Japan or Canada, most of the seed planted has been hybrid for say 25 or 30 years. That's shifting now in the Middle East, in China and India. It's happening very quickly, so the value is going up. Because the typical input cost for a farmer is about 7% for seed versus water and fertilizer and electricity and diesel fuel and all the other things. So the seed cost is still pretty low, and even if you raise the price, it's relatively small compared to all the other inputs. So that's causing the value to go up. And then on the agronomic side, which I mentioned before, the corn and the soybean, the rice and the wheat, the traits that are being put in to keep rice from, being susceptible to fusarium, or wheat to be susceptible to rust, which is another type of fusarium or fungus, if you will. Those are expensive, and so to pay for that, farmers pay a little more, but then they get a crop, and so that's driving. We think the value of the vegetable seed side will double in the next 7 years, for example, driven by technology.
So turning back, Scott, when you're looking and you're evaluating companies in this space, you talked about what you looked at previously. It sounds like though a food company for you is no different in the process that you go through for other companies. Do you look at management team's background? Does the fact that they've been in the food business a factor for you, or does it really come down on the founder's fund side to just the numbers that you're seeing and the potential for growth in the sector?
Yeah, let's see. I would start with just going back to the question about, do we approach it like any other area? And I think every single sector, so we're a stage agnostic, sector agnostic firm. We do approach every company as its own company with its own specifics, but we apply the same frameworks to all of the basic questions of, is this a huge opportunity? Can this be, in some ways a monopoly business or a business that has very durable pricing power? So, and that flows out of a lot of analysis we've done on what the highest returning companies look like, and this sort of trend within investing where the best companies are worth more than all the other ones put together. And those companies that are worth the most are the ones that have a lot of lasting power. So that's the basic framework we apply. The way we get there, and the way we say, okay, are you doing something that no one else can do? Are you going to not have to compete on price in 10 years? And by the way, 10 years and onwards is usually where most of the value of these businesses lie, if they turn out to be huge businesses. It comes down to four ways: either some sort of network effects, a deep technology, scale advantages, or like a brand monopoly. And I think almost all those have already been talked about here today. So yeah, that's basically how we think about this space. And everyone on the team is really a generalist, so that also matches that. But I think there's a second part to the question.
I think you've covered it. In fact, you've covered it quite well. So, but James, you've had quite a significant tech background yourself in terms of leading companies. Do you think it plays a role about whether an entrepreneur has a food background or has some sort of knowledge of the industry? Maybe both Tony and Rob, both worked in farms and have the knowledge of the market from the ground up. Does that play a factor, or can anybody do this?
I love this question because I'm if you looked at my resume, I'm like the last person you would think of as a food investor, right? Having built and sold multiple technology companies and studied computer science, and my point of view is that I think it's kind of like the hybrid seed. There's some benefits to having domain expertise of consumer packaged goods, of food, of beverage on the founding team, but I think it's really essential to have some people that are not from that business. And my bias is that I love it when technology entrepreneurs kind of cross the chasm over to a food-related business, because I think they bring an innovation and a iteration pace that you don't typically find in someone that's been classically trained at Quaker or Clorox or Procter & Gamble. And you know, we saw that with Plum, where Neil Grimmer basically was trained at IDEO and was kind of the food hacker at IDEO, and he brought a whole design-centered thinking process to reinventing baby food, and it worked. You know, it worked with customers, it worked with channel partners. You know, I think Rob's story is a great one. You know, leaving Google, where you were the lead APM on Google Plus. Did I have that right? Something like that, to go do you know, to create the always-on farmers market is inspiring to me, to see tech entrepreneurs that want to move into a new market, and they want to create a business that combines profit and purpose. A lot of the mission-driven investing that's come up multiple times on the panel is something we're really passionate about. There's folks in the audience, there's Timothy Childs, who I knew back in the Web 1.0 days, who's now a repeat entrepreneur in the food space. There's Mike Shim, who I just met this morning, who was at Groupon and Yahoo, who's now doing a food startup. So I think that's not a fad, I think that's a growing trend.
So let's talk a little bit about the challenges faced. Deven, do you think that the entrepreneurs in this space face any particular challenges that every other entrepreneur faces if they're doing data, or is there anything particular to the food space that distinguishes those challenges?
I do think that it's definitely different. The food space is hard. You know, you're not dealing with a software program that's easily scalable. You're dealing with perishable products, which are very difficult to distribute and move around, and the supply chains are very difficult. The sales and distribution is difficult. There's a lot of different players with many different incentives that you have to navigate. So I'd say it's very different in that sense. Just moving straight from tech into it, into food, I think it can be a challenge. Although I'd echo what you said, Jim. Just having those technologies coming in, there's a level of passion and a willingness to break stuff that this industry really needs badly. And this industry is growing very, very quickly, and we need innovators that are going to think completely outside the box from the way that this industry has operated in the past. So it's different, but certainly the technology can navigate it quite easily, I think.
And Rob, how are you addressing the perishability of the food products? What are you doing differently? How are you addressing that challenge?
Yeah, so the way Good Eggs works is when you go to Good Eggs, you basically see inventory representing essentially what you find in a grocery store. You've got fruits and vegetables and baked goods and prepared foods and flours and really anything you could get if you go to the supermarket. And you go on and you order what you want and you get home delivery. And so it's kind of like an online grocery store, except that the way it works is totally different, and it's all based on perishability. So there's actually 150 farmers and food makers who have their inventory on Good Eggs in the Bay Area. Right now we're live in the Bay Area. They have their own app where they're managing their inventory and they're setting their own prices. And when you order on Good Eggs and you order your strawberries and your fresh bread and your prepared foods, those orders actually go directly to the food makers. And you're usually ordering for 2 days in advance. So if you're ordering online on Monday, it's for Wednesday delivery. So you place your orders. On Monday, those farmers and food makers get the orders. And then they actually make the food for the customers. So in the case of farms, their harvest schedule is aligned to the Good Eggs system, and so they're harvesting on Tuesday based on the orders that they got on Monday. They're actually pulling something out of the ground for you. In the case of a baker, they're baking bread for you based on the number of loaves that have been ordered. Our prepared food is made for you. And so, and then to complete the chain, Tuesday night or Wednesday morning, they'll bring the food in aggregate to our food hub in the Dogpatch neighborhood in San Francisco. And then Wednesday, we'll pack orders by customer and ship them out for home deliveries. And we do that 5 days a week. And so actually everything that arrives at our food hub is pre-sold food. And by the end of the day, the food hub is empty. So we never hold inventory. And actually, it's pretty drastically different than the way most food retail businesses work. The way all supermarkets work is that they'll buy food wholesale from producers, they'll hold on to it, and then they'll resell it. That's the way retail works, especially in food. And Good Eggs is unlike that. It's more of a just-in-time supply chain. which I guess you could say is something that we see in the tech world happening in a lot of places. It's just-in-time supply chain, kind of industry by industry, but it rarely happens in food. And so that's how we tackle perishability, is that almost all the food that you order is made to order.
And Tony, what are some of the principal challenges that you're seeing in the food and the seed business in terms of either the global nature or what, because you don't have probably the same perishability issue, but you may have, you're having, as you said, seeds planted in very, very arid years that may not produce even if your seed is good. So.
Right. Well, we have a perishability issue only in that seed is alive and we have to keep it alive. We have to keep the germination above 90%, meaning that when I sell you 10 seeds, 9 of them better germinate, or I'll get a lawsuit from these farmers who are paying so much. So we are careful about that. We have to be extremely careful how we handle the seed. And we plant all over the world. Typical, for example, if we were doing a hybrid tomato for sale in Europe or the United States, we would probably produce it in Chile, California, China, Vietnam, Moldavia, maybe Tanzania, and California. Turkey, maybe Italy, Israel, and we will take little pieces from all over the world to make sure we don't lose any crop. And then we also do counter-cyclical for Southern Hemisphere, Northern Hemisphere, moving the seed around to make sure we get it to the people who want it when they want it. Otherwise, you don't have inventory when you need it, which makes your investors really mad, or you have too much and you're paying for this extremely expensive inventory that you may never be able to sell, which makes investors even madder. So the key in our business is knowing your forecast, knowing your customers, and it's funny, the interesting thing, all of our investors are technology folks. We have a few that understand ag. I didn't come from ag, I grew up in farming, but not vegetable farming. So it's really different. But the technology people understand R&D, which is great. So having new people come into the industry who come from a tech background is actually really helpful. They understand that. What they don't understand often is the lead time. In our business, we have a huge lead time. If you want to grow a carrot or an onion seed, it takes 2 years. It's a biennial crop. If your tomato seed takes a year, the rest of them mostly take a year. But then you have to treat them and you have to trial them, because farmers are very, very skeptical people. I can say that because I used to be one. And they want to see it in their own field. You can't say to a guy in Syria, and most of the farmers in Syria are still men, I can say that, that hey, this works in California, you're going to love this. So pay me $300 for 10 seeds. And you usually have to trial for 2 years, and it's a long lead time to some people who are used to selling software or services. But that's how we do it.
So Janica, you talked that good eggs is an exciting part of the industry, but what are you looking for? And you're both sourcing transactions and you're helping seeing them through. What's exciting in this space, and what are you looking for sort of future transactions? Either types of companies or just different qualities of the company themselves.
I think Deven hit on part of the challenge in food, which is also an opportunity when folks get it right, and it is really difficult. How do you create a product in a very crowded market that actually has a reason for being, or a service? And with food, depending on where you are in the supply chain, if it is consumer-facing or perhaps even farmer-facing, brand is actually really important. So how do you create a product that has a reason for being? How do you build a brand around that people care about? And how do you get that product to a shelf, or if it's not a shelf, since that is sort of an old school conventional way of thinking, how do you get it into a consumers or farmers or whoever it is hand? So we think a lot about that, just product and brand together. I think with a number of these food companies, it's also very important to think about gross margins. This isn't a software business, so you do have a cost of goods sold. So the more gross margin you have, the more you can spend to get the product in people's mouths or get the idea in people's heads. And what we found with companies that are very successful is even if you start in a small geography like the San Francisco Bay Area, if you get people to try it, and you can demonstrate in a very small area that they'll continue to buy or continue to use the service, that's really what we want to see. If you can then believe that you can expand that to another region and have the gross margin, the capital, the brand, the product, the acuity to do that, that gets us pretty excited.
And Deven, following on that, what sort of are qualities are you looking for in entrepreneurs that would distinguish one company that you invest in from another that you may pass on?
Well, we look primarily at people and product. That's what drives success in business in the long run. So when we look at a company, it's got to have an outstanding product. Period. Full stop. I mean, people, you can throw a ton of marketing dollars at something, but if it doesn't taste good, people don't come back and buy it. It's just not going to happen. So that's the first filter. If we like it, if our friends like it, if people at Cliff Bar like it, we're really interested in learning more. And then we look at the team and say, okay, who is this team? Are they passionate? Are they knowledgeable? Do they have a good background? Are they willing to learn? Do they want to learn? And are they looking for partners that are going to help them grow a business? So there's all of those things we look for once they're mission driven. But there's an intangible there that I don't know how to describe it. You kind of know it when you see it. I'd say passion and knowledge and wanting to change the world is really what we look for.
And James, I'll let you continue the thread about what distinguishes other companies from the others.
It's a tough question. I applaud all the folks that raised their hand in the audience that are starting companies in this space, because you're taking the path less traveled, and it's really hard, and you don't have the kind of pre-revenue exits that the technology space affords. You really have to build scale, build margin, build a real business. I think for us at Catamount, we, like most venture capital firms, we say no to 99% of the stuff that we see. And we see a lot of really great mission-driven, passion-oriented food product companies that we love, but we don't fund because they don't match venture scale economics. Like, there are a lot of businesses that you see in the natural set, or you see at Whole Foods, or maybe they're in the natural set at a traditional grocer. Maybe they're single SKU companies, or they have a single product family, and they don't necessarily have what it takes to get to the kind of scale where you cross over to mainstream distribution, where you have a path to multiple product families, to north of $100 million in top line revenue. These are the kinds of things that it's our business to find as venture capital investors. We're looking to drive returns, but we're also looking to fund mission-driven businesses that can get to that kind of scale. And it's not all food companies or all CPG companies fit that lens.
And Scott, what recommendations do you have for entrepreneurs in the industry, in this room and who are watching online, to grow their food business? And maybe not, when they approach you as an investor at Founders Fund, what sort of the recommendations you would have, and either how they approach those meetings or how they structure their business going forward?
Yep. Let's see, and quickly going back to your last question, which I realized I didn't answer all of. I skipped on the what sort of stuff do we look for in teams, and do we require backgrounds in this space. I think in all of our investments, you'll see that the teams skew more like the traditional Silicon Valley, startup founders, software people, just engineering backgrounds from any area. And so we don't require a background in the space that you're going into, although it can definitely be helpful, as a few other people have mentioned. What we're more interested in seeing is, do you have a business strategy that makes sense? And given that strategy, do you have all the pieces in place that can execute on it? And so sometimes that means that you're going to have to be doing a lot of learning that is going to bring you up to speed in that space. I used to work at SpaceX, and one of the things that Elon said was the job of a CEO. He said, many awesome things over the years, but one of them that most people probably didn't even remember was, one of the jobs of a CEO is to learn things, to learn like many new things that you know nothing about. And so on his bookshelf would be all these, textbooks about composites and things like, what CEO learns about this stuff? But in fact, you have to learn about these things, even if you don't want to learn them, to get good at what you're doing. And so for us, we really want to see teams that are very mission driven. They're not saying, I want to be an entrepreneur. They're saying, I want to solve this massive problem that's in the world, and the only way that it's going to get done is if I start a company to do that. So that's what we're looking for. In terms of what should food companies do when they come to try and raise venture capital funding, I would say, some of it's already been said. Think of yourself not just as a food company, but as a huge, how do you become a huge, powerful business? How do you create a great technology business or a great network effect driven business, et cetera? And so it's going to be case by case specific, whether you're a grower or a distributor or what have you. So I would just say make sure there's a very good business strategy in place, and that's going to be the primary thing. That's really what we use to evaluate the quality of the team, and not the other way around.
So Tony and Rob, I'm going to turn to you as the CEOs on the panel to talk about longevity. What's going to be some of the driving factors that help your companies continue and grow, and where do you see it going? Maybe I'll start with Rob since he's closer, but where, you talked about your process. I saw that you moved into new cities more recently. Where do you see this company growing in the next 10 years, and what is going to be the thing that helps you achieve that longevity?
Good Eggs is going to be the channel that is used to connect folks with their local farmers and food makers. And that's going to mostly be in the context of retail shopping. So one of the things that we see in the food industry is that the retail brands are really the ones that exert the most influence on supply chains. And our mission at Good Eggs is to change the way that the food supply chain works to grow local food systems and local supply chains. And in order to do that, we realize we need to be a food retail player. And we actually see a little bit of a parallel 30 years ago when the organics industry was just starting out and starting to gain some traction. You started to have these natural grocery stores, and then Whole Foods came in, and Whole Foods became the retail brand of record for organics and natural food stores, and they grew and they rode that wave because organics and natural food stores were already enjoying this kind of massive trend in society, and it wasn't invented by Whole Foods, but Whole Foods effectively enabled and catalyzed the growth of that whole sector. And we see actually something very similar happening with local food 20 years later, is that you have this phenomenon that's growing massively. It's a grassroots phenomenon. It's manifesting in books and movies and farmers markets all over the country. And there's still a lot of friction, and Good Eggs is going to be the retail brand that catalyzes and enables the growth of this phenomenon that's already growing without Good Eggs. And the way we're going to do that is by being the retail brand for local food. And it's actually different than another kind of grocery store, because in order to be the retail brand for local food, you necessarily have to be distributed and grassroots. And that's why structuring it as something that's very tech and internet enabled is something that we feel is key to success as a long-term Good Eggs brand.
And Tony, on the seed, where are you sort of seeing the company go, and what's going to be some of the key drivers to achieving that long-term success?
We're lucky in that we're in the vegetable business. People all over the world, we saw it here in America many years ago and in Europe, people have realized that eating healthy vegetables is good for you. People want more healthy vegetables for their kids. That's happening even faster now in China and India, Malaysia, Indonesia, Brazil, the big population growth areas of the world. It's happening in Africa. And because of hybrid seed and the things that we're doing and our competitors in the industry are doing, Africans, for example, are now able to grow tomatoes and peppers and melons and things that they want to eat. They couldn't grow them before because of disease, pressure in the soil. We're overcoming that with technology. So that, we're riding that way. The other thing that's happening is, you've all heard the Norman Borlaug quote, the father of the Green Revolution, who died a few years ago, said recently before he died, he said, we're going to have to produce more food in the next 50 years than we have in the last 10,000 years. And that's true. If we continue to grow, we're going to have 9 billion people here pretty soon. And to feed that many people, it's going to take technology. We can't do it with existing levels of water. We can't do it with existing levels of nitrogen. And we certainly don't have the arable land that we had even 100 years ago or even 20 years ago. So we're riding those waves, and that's all good for us. Our personal approach is that we're doing acquisitions all over the world. We've acquired 3 companies. We have companies in the Middle East and we're in Lebanon, of course, everybody's in Lebanon. We're in Mexico, and we're in, I inherited that one in Lebanon. We're going to move that one to Jordan, a not much safer place. And in California, but I'm leaving day after tomorrow. We're buying a company in Holland and China and India and all over the world. What we like to do is move germplasm or seed or genetics around the world and literally cross-pollinate. And it's hybrid vigor. It helps plants become stronger. It enables people to grow crops where they couldn't grow crops before. So how we're going to grow and stay competitive and fight against the big guys like Monsanto and Syngenta and Bayer and all the other folks who've put billions of dollars into research is by buying smart companies, really good people, great scientists all over the world, and keep growing that way. We're an acquisition company.
And speaking of those sort of smart local companies that you're looking at, how does it change the dynamic to have technology-driven investors? Do they, you are talking about long-term relationships and you're talking about the farming business. Does it change the dynamic to talk about your investors and have them be sort of primarily technology-driven? Do they pick up on that? Is there a trust factor?
They like our margins. Our margins are pretty much like software margins, so they like that. What they don't like is the fact that it takes many years. It can take 8 to 10 years to develop a new tomato variety. And then you have to trial it 2 years everywhere you go. And in Europe, and in Turkey, and Egypt, and India, you have to register for 2 years with the government. And in Brazil as well. So it takes a little time. I remember my first venture in this back in 1995. We were invested in by a group of New Yorkers. I don't think they'd ever seen the plant. And I remember one meeting, one EBITDA session where they said, "Can you sell more onion seed in Spain this month?" And I said, "Well, they don't plant onion seeds in Spain right now. That was last season, and they would have to, invent more land. But you can't. It's not like toothpaste." And so the technology people sometimes don't get it, but overall, it's great having the technology people because they're pretty smart. And they understand, as I said earlier, R&D is a big part of this. We spend a lot of money on research and development, and the technology people understand that's okay to spend money on that.
Great. So for the investors, and Janica as well, staying on this theme of longevity, what's going to drive this sector to be a significant investment opportunity for a longer period of time? Is it going to be the number of companies in the space? Is it going to be the deal size that increases? What's going to be the driver? I mean, food is a necessary, I get that, but in terms of the investment opportunity, what's going to keep this sector to be of interest to investors and acquirers for a long period of time?
I think it's going to be customers, the end consumer. The bet here is that consumers everywhere in mass are changing their habits. They're voting with their wallets and their pocketbooks for new kinds of products and services. If entrepreneurs can't change, consumer buying patterns, then they're not going to build significant businesses. But we're seeing proof points, right? Whole Foods is taking $20 billion of market cap away from traditional grocers. Annie's Organics here in California. Who would have predicted that Cheddar Bunnies and Organic Macaroni and Cheese Company would be one of the top 5 performing IPOs of 2012, right? That's all driven by consumers. That ultimately, your job as entrepreneurs is to delight the consumer and give them something that's better, fundamentally better than what they had to offer before on the shelf.
I'd add one of the big macro trends that we see that makes people's interest in food is somewhat inevitable is one, demographic. You've got an aging baby boom generation that is increasingly looking at their own mortality and saying, I need to get healthier. So they're going to look to the Whole Foods and the organic foods as one of the remedies for that. In addition, healthcare is frankly just unaffordable, period, full stop. And the only way to afford healthcare is to not get sick in the first place. And so, the best way is to drink water, eat good food, and get some exercise. And it's really that simple. And so I think people are going to look more and more toward food and organic foods and all of the stuff that we're talking about here. They're going to look for those brands that they know and they trust and they can keep keep them healthy in the long term.
To add to that, what we've seen as well is that the longevity challenge is typically around how does a company that's been around for 10 or 20 years continue to innovate to meet those consumer demands. So everyone gives the example of the floppy disk. It's true in food as well. And I think the brands and companies that have stayed ahead of the curve or stayed very relevant are those that have just done this perpetual iterative innovation and created products that are not so esoteric that people don't know what to do with them, but that definitely meet these health, nutrition, wellness demands.
And then just building on what a few other people have said, I think obviously there's been a lot of traction so far, but we can't forget that we're in San Francisco, which is definitely a foodie city, right? And also a wealthy city. And things have gotten a lot of traction in these richer, areas or subsets of the country, but if you actually want to impact the entire country, you might need food products that are more affordable. Obviously, like many of these things we're talking about are more expensive and not everyone can afford that. So the stuff that gets me the most excited is, can someone produce a better product for less money that tastes better and that meets all the needs of the consumer and not just a small subset of consumers. So, you see things like cultured beef. Unfortunately, it's still way too expensive, but, if people found ways to produce this stuff much more efficiently and scalably and at lower cost, then that's really interesting. And I think to your point, at some point, this is going to become mandatory anyway. We can't feed, an infinite population with the arable land we have. Sci-fi writer Asimov at one point wrote a story about the 2014 World's Fair, I think, and what you would expect to see there. And finding new ways to continue the trends that we've had in crop yields might be a big part of that. If the whole world looked like Manhattan, he wrote, you're not going to be able to feed it, at least not with today's technology. So, there's debates over how big does the world's population get. It's the whole limits of growth thing. But yeah, I think that could be a big opportunity area too. And just thinking, going back, thinking through how can you make your company have an impact on every person and not just a subset, even though great businesses can be built, even if they're niche businesses.
So let's just talk a little bit about technology before I turn it over to the crowd. Tony, you've been in this business for a while. I mean, what sort of technologies are exciting to you? Or is it different? Or have there always been really great advances in technology and now there's just certain global pressures that are making them more front and center?
No, it's changed a lot in very recent years. For many, many years, we were farming like we did in the book of Genesis. I mean, you can still go to huge parts of Africa and the Middle East and see people in the Jordan Valley, for example, even parts of other parts of the Middle East and North Africa, and you see people farming like they describe in the Bible. That's changing quickly. The other things that are happening pretty quickly is there's so many smart people looking at technology, for example, not only in seed, but seed coatings. You have huge companies like BASF and Bayer and others looking at things you can solve, plant problems you can solve with seed coatings, not just plant breeding. And now with genetically modifying the seed, maybe you can solve the problem with a coating on the seed. The other thing that's happening that I think is really exciting is, and there's such a challenge in water. I would say if you're looking for a business to get into, find a way to make clean water available to everybody and to farmers and to people that want to drink it. That's a great business. But soil technology, making soil able to handle water more efficiently, making plants and soil be able to handle nitrogen and potassium more efficiently, because we have a finite world of nitrogen and potassium and all the things we just dump on the soil for fertilizer now, but we can't keep doing that. For one thing, it's ruining the ground, the water, and secondly, it's really expensive. So all those things are happening, even things like irrigation technology, physical hardware, tractors, software that work with tractors for sustainable farming. For example, if you were farming in the Midwest, you don't want to put the exact same amount of very expensive nitrogen on every square foot of land. And so John Deere and other software manufacturers have been working with this GPS system. I'm sure you all know about it. But you can program your tractor and go through the field and just shoot the nitrogen or the potassium or whatever you need, the lime, where you need it, and you save millions of dollars. That's the sort of thing that I think is really exciting and it's happening. There's a lot of really interesting technology coming up.
And open it to the rest of the panel as to any other technology. I know, Scott, I mean, you're the Beyond Eggs or now Hampton Creek Foods, and that is impressive technology, which I look forward to trying in my own home. But is there other technology that sort of jumps out to you? It's exciting to keep a pulse on, or what you see coming up in the ag and food space?
Yeah, I think there are a few companies doing interesting things that are still early stage, and some of them I know are stealth. They're trying to do things in the mid space, similar to Hampton Creek Foods. But yeah, beyond that, there's we're constantly looking and searching for these companies that are developing the next interesting technologies, and I think when we find them, you'll hear about it in investment. Yeah.
And then I do one final word is really about the acquirers in this space. I mean, James, is it always exciting to see something like Plum, which has this innovative approach, get sold to a company like Campbell, or is there sort of a little bit of like, is that going to keep the innovation going, or is there a little bit of a big firms coming in and swooping up the little guys continuing?
I mean, the Plum exit was maybe the bittersweet might be a good word in that, we really believed as investors that we were on a track to build a company that, and a brand that is the kind of next Kraft, the next trusted brand for kids nutrition. And I still believe that Plum is that brand, and having Campbell's as a parent gives it a lot of distribution power, a lot of marketing power, a lot of global reach that we didn't have as a startup. And I think that was a big calculus for the founders in deciding whether to sell or whether to keep going. But we had been on an unbelievable growth trajectory. I mean, just to share with you guys, I think there was an earlier question about what do acquirers look for, what does the public market look for. I think growth comes to mind. Janica, growth is in your firm's name, right? 2008, first year kind of in market, Plum, we did $500,000 in revenue. We then did 4.5, 2009, then 15 million, 2010, then 38 million, 2011. Last year we did the US business 81 on a plan to do 74. So more than doubling year-on-year growth is really hard to do in any business. I think it's especially hard in a consumer packaged goods business. And so we had unbelievable growth. We had just added Senator Bill Bradley to the board. We acquired a UK competitor and expanded to Europe. So we were really on a tear to potentially follow the Andy's path and take the company public. But I think the founders and the board decided that the pros outweighed the cons in terms of exiting to the right strategic. And we were fortunate to have multiple buyers at the table. And we chose Campbell's because we felt it was a really good fit because they wanted an innovation team. They weren't just buying a revenue stream or a brand, they were buying a team to continue to innovate and to expand that innovation into other categories that Campbell serves. So that makes me cautiously optimistic that that team is going to continue to break the sound barrier and innovate at their new home.
That's great. And then Rob, what guidance would you give to the entrepreneurs in the crowd about running your business, growing it in this space? And how you mentioned that you face challenges and you run into roadblocks. What sort of guidance would you give to the group here?
Well, doing a startup is really hard, so kudos for trying it. And especially in the food space where margins are slim and you're dealing with nature. I think the advice that I would give is we're talking a lot about technology and what technology can bring to bear on the space, but that kind of scares the hell out of me because technology deals with abstractions, and what makes food good for people and good for the earth is getting rid of the abstractions and thinking about the people who are buying the food and the people who are making the food and the relationships that are sustained by the food. And so focus on the people, focus on the people shopping and what's going to keep them and their families happy and healthy, and the people who are making the food and what's going to make their businesses sustainable and what's going to allow them to pay fair wages to their employees and take care of the land that they're farming. And if we're paying attention to that, and only using technology as a tool to accomplish social and environmental goals, including business goals, instead of seeing technology as the focus, I think that's going to be a more successful path.
And Tony, what guidance as a CEO would you give to the other CEOs in the audience about growing their own business and navigating the sector?
Hit your numbers, promise low, deliver high, hire the right people, hire smarter people than you are to have working with you. And in our case, I completely agree with Rob on the, you have to listen to what people want. We're seeing people all over the world want to eat healthy food, and they're looking for ways to eat healthy food and not take vitamins. They want to be able to get the nutrients they need from their food, and so we're breeding for certain types of vitamins or certain types of attributes in vegetables, so that you can eat a particular type of tomato or squash and get a super injection, if you will, of a vitamin that you really want. I think that's the way to stay current. Listen to your market, and like I said, keep your investors happy. Hit your numbers.
So now,
can I share one
absolutely,
just other tidbit of potential advice for at least some of you folks in the audience? Two consumer companies I've been involved with. We talk a lot about Plum Organics, but also Numi Tea here in the Bay Area. Both of these companies are actively innovating and disrupting what I think of as sleepy categories. The baby food category is kind of dominated by Gerber for years. The tea category, at least in the U.S., is a pimple on the butt of the coffee business, and retailers just didn't care that much about it. And both of those companies are delivering really innovative products that customers love, and that's table stakes. You have to do that, but this doesn't apply to Rob because he's consumer direct. But if you're selling through retailers, the other thing that was kind of a surprise learning for me is that you also have to deliver great SKU profitability to your retail partner. And what both Plum and Numi did is they figured out ways to create innovative new products, flavor profiles, ingredients, packaging that got consumers excited and got consumers to buy a product, in some cases that cost more, a little bit different than your more for less. They were maybe delivering the same for more at a price point, but it enabled the retailer for that 6 square inches of shelf space or 3 linear feet of shelf space. Suddenly this sleepy category became more profitable for the retailer. And man, that's a magical thing if you can deliver that, because whether it's a Kroger or a Target or a Safeway, they really wake up. They measure that rigorously, and they really pay attention to you as an emerging brand if you're delivering more SKU profitability than the incumbent that you're trying to disrupt.
Yeah, and in that case, you need to think of the customer as the distributor, or like the store itself. And just one other point, you mentioned, like, definitely do these things, keep your investors happy, but the other framing from the investor perspective is do these things to make your company succeed, and that should be the primary goal, and then your investors are going to be happy.
and Deven and Janica, I'll let you weigh in with any guidance before we open the floor up to entrepreneurs in this audience, and what makes, what can help drive them into success or to happy CEO world. So.
I just reiterate the innovation theme, rock the boat. The category needs it. It is sleepy in a lot of areas, and huge and sleepy usually means opportunity. And secondly, this may not be characteristic for the investment banker on the panel, but bootstrap. Bootstrap when you can. See if you can make something work. I think there's a Silicon Valley mentality around getting an idea on a napkin and then getting $10 million for it. And the food landscape has changed significantly, so becoming today's Amy's Kitchen or Nature's Path or Mars Food or whoever it is that's still independent, that's really, really rare. But just think about how you use limited resources the best that you possibly can.
I think Rob said it best. You want to focus on the consumer, the end consumer. Don't think about the exit or anything like that. The companies that get us most excited are entrepreneurs that are focused on their particular product. It's almost like a hyper focus. They're so passionate about it, and they're solving this consumer pain that consumers can't help but get excited about it, and there's this consumer pull that happens. As long as you remain focused on that, I think the rest of the stuff will take care of itself. So just maintaining that connection, making real connections with consumers, and making sure that they're continually buying your products that are high quality, good for them, and have an inspiration for them. There's an emotional connection for why they want to eat this particular product.
Okay. So I will open it up to questions there in the back.
For Rob, I wonder, do you think that the local food market is limited, for example, that it would thrive in places like the Bay Area with a lot of local farms and a big population? And related question, one would think it would be markets like Arizona or Florida with a lot of retirees where convenience and ordering online would be an enormous opportunity. Would you ever think of that, where you might be dealing with locally sourced food and processed food, or are you just focused on local food?
So I'm going to repeat the question, and I apologize for summarizing it. It's really looking at the San Francisco market, Rob, and evaluating that compared to maybe Arizona, where there are more retirees looking for more maybe processed or more packaged foods, and really comparing the San Francisco market to other markets that you may be looking into. Is that
It's how big will the local food market eventually be?
How big will the local food market be?
Great, so we see the local food phenomenon starting mostly with farms and ranches, but then all sorts of independent small food businesses making food with integrity and selling direct, including, like I said, bakers and kitchens of all sorts. We see that representing today around $10 billion of sales a year, which is maybe something like 1% of the food industry. And it's totally national. It's certainly thriving here in the Bay Area, but it's interesting. If you study the press in any of 30 markets in this country, they all refer to themselves as in a food bubble. It's like language that everybody uses. It's what they use in Charleston, South Carolina to describe the food scene there. We're starting up offices now in 3 more cities, in New York, in Los Angeles, and in New Orleans. And the reception that we've seen in New Orleans has been totally tremendous. There's this thriving community of producers and people interested in buying local food. You know where local food is a huge phenomenon is in the Bible Belt, where you see farmers markets springing up because there's kind of this libertarian ethos that appeals to. So we see the local food phenomenon growing massively and already represented around the country and really around the world. I mean, it's happening in European capitals, and the whole CSA concept is something that was invented in Japan. So we see it as a global phenomenon as well, as kind of a reaction to what's happened in the industrialization of food and consumers and producers wanting something that's better. As far as folks wanting convenience, it's kind of a tangential question, but in markets like Florida, there is a thriving local food scene as well. Small food businesses making food with a lot of integrity, wanting to reach customers directly, and there are customers there who are watching Food Inc. on Netflix and reading Michael Pollan who want that kind of food. And one of the things that we realize is that in order for the local food phenomenon to grow 10x from where it is today, it does need to meet and surpass the convenience of grocery stores. And so that's what we're trying to do with Good Eggs, is let you shop directly from these local producers, have the food made to order, but also get home delivery.
I'm interested in the marketing aspect, especially customer-centric marketing. So, and social use of digital strategy. Do you see this question of food production intersecting in any way with the way people cook, with how they get information online about food, that sort of thing? Or do you see these companies growing strictly through kind of a classic, how do you produce the food and how do you move the food around? In other words, is there a connection between online marketing and what you're doing in food production?
So the question's focused on online marketing and food production and distribution, and throw it to the panel. Maybe some of the investors, James?
Yeah, I can start. I mean, a couple of examples. 7th generation in the kind of eco-cleaning product space. We're a lead investor there. Plum, Numi, all three of those companies have a portion of their marketing budget focused on online social community. You can use different buzzwords, but basically they are focused on the kind of care and feeding of an inner circle of passionate customers that are basically evangelists for the brand. And that comes in handy in a lot of different facets of the business. It's a great way to test new products, to kind of take the lean startup, minimum viable product approach that's really easy online. That's really hard offline. If you've got a 6-month R&D cycle and you're about to commit to a co-packer and run a huge line of products, well, how do you actually test them for consumer acceptance? And so using some of your evangelist customers is a great way to do that. It's also been great in the companies I've been involved with for growing distribution. If you are trying to open a major grocer partner, for example, they will typically test you first. It's kind of like in enterprise software where a big company will do a pilot of your technology. Well, in consumer goods, you'll get a test of maybe 20 stores before you can get to 1,000, right? So what if you had a mobile, a social connection to a bunch of your customers with smartphones, and you could activate them like a flash mob and get them to go buy your product at those 20 stores. So the turns and the SKU productivity just blows the retailer away. So it's kind of a growth hack that you can use social marketing to enable.
And Rob, what sort of marketing how much did you reserve for your budget for marketing, and have you found certain marketing ventures to be more successful than others? I mean, where did you find that your word of mouth actually caught fire?
Yeah. We're really just starting to spend money on marketing, and up to this point, it's all been word of mouth. A lot of which happens on social media channels like our Facebook page or our Twitter presence. And so we've been active on all the media channels to build our community of evangelists. We're starting to experiment with advertising now and spending money on it, but too early to say what's going to be effective.
I mean, I want to add that I think that the whole social media phenomenon is very important, but that's not to lose sight of the own personal connections that you make with people. So at Cliff Bar, for example, we spend very little money on traditional print advertising. We spend all of our money on event marketing. So we are going to marathons and triathlons and ski slopes and interacting with consumers face-to-face, one-on-one, and telling our own personal story or what inspires us. And it's a much lower build, but it's far longer lasting. It's much more sustainable in the long run. And I think for our product, we think that that's the best way to interact with consumers. For the long run.
Events have been huge for us too.
And then one other thought on all this, there's obviously no shortage of ways you can try and reach customers, and you're going to have to do testing to figure out what's the best one to reach your customer, but it's also important to think about it in a structured way. And I think basically you need to establish, here's who our customer is, here's how much they're worth to us at the end of the day, subtract off the cost of delivering that, here's how much money we have to work with in getting them. And so if you're talking about huge enterprise software deals, that can be like one salesperson for a full year just working on it because that contract is worth that much, versus if you're selling, low dollar per item products to consumers, you're going to have to go maybe more of a social strategy. So I think it all depends.
A SpaceX satellite launch is a little bit different than a jar of baby food.
Yeah, you probably don't sell that. You probably don't sell that to your commercial satellite customer by posting a couple ads on Facebook. That's probably not very good. If you could, great, but you can afford to do more.
I'll just add one other example, and we have found that a number of our clients do start with word of mouth around a great product, but one example that has both the product technology piece and the manufacturing piece was a company called Blueprint Juice that some of you might know. Now you can, at least in New York, buy juice basically on every corner. Everyone's talking about fresh pressed juice, and Blueprint was really the first one to market, and they started that business in a little commercial kitchen where they got the space for free and were testing it on a population of moms in Connecticut who gave them a lot of feedback. And they realized, wow, we have something on our hands here. People love this product. And word of mouth just spread throughout the New York City area, and they started this as a direct-to-consumer business. So they would ship raw, perishable juice, inexpensive juice in this case, to your doorstep. People were very accepting of that. It just spread like wildfire. They also manufactured themselves and were using this HPP technology, which is high pressure pasteurization. So basically pasteurizing a product without using heat, which preserves a lot of the nutrients. So that was very tied into the whole marketing message, and it really just created a snowball effect, and they very quickly went from $0 to $15 million as just an online business. And that actually created pull from the retailers, because you had some of these retail store buyers who'd actually been buying this juice online and said, we have to get this in our stores. So I think that's a great example of how you bring technology, manufacturing, and the marketing piece together without spending a lot of money.
Gentleman in the white.
I wanted to talk a little bit about technology, or just have a question about technology. Tony Gregor Mendel as the father of genetics. I mean, that guy didn't know what he was doing. He was taking these white flowers and these purple flowers and doing all these random genetic mutations up on this monastery in the hill. Only until after he died did people realize the significance. If you look at corn, modern corn, what it came from was this weed in Mexico, and it was bred. All random genetic mutations. New technology, like synthetic biology, gives us an opportunity to go on and do targeted modifications, not these random experiments, but we don't know what the outcome is. So, don't we have this irrational fear of technology when we have new technologies that could maybe reduce pesticide or water or energy use, but yet we're going back to natural technologies where we're actually doing random genetic recombination? We don't know what we're doing.
Well, that's a good point. It's not as random as it sounds. On the agronomic side, as I said before, it's pretty much corn and soybean are almost 100% GMO because they've been modified. They're very, very modified products, and that's going to happen in the next 10 years in wheat. That's happening now in rice. It's happened in cotton. It's happened in canola and soy and other sunflower seeds, for example. In the vegetable world, which is a big world, and in fruit as well, we do look inside the DNA, and we create the product that we want very specifically. It's not random. We start with thousands of breeding lines, because if you have thousands of breeding lines, you want to keep thousands of breeding lines alive in the world so that you can keep looking for things. But you're absolutely right. I mean, tomato was a poisonous ornamental in Central America, and then the Spanish priests took it home and they thought it was poison, and somebody said, let's eat this stuff, and then they started selecting and making bigger tomatoes, and now we can make yellow tomatoes and orange tomatoes, and it's all from selection. Broccoli was invented in 1927 by an Italian breeder named Broccoli. That was supposed to be easy. And we, my company, has come up with a new garlic that you'll all see, I hope, in the next year or two. That's basically just a way of cultivating garlic that hasn't been done before. It's all natural, but we're able to figure it out with science. And it gives this particular product is going to give
Makes your breath smell like peppermint. It's amazing.
We haven't fixed that one yet. It's pretty bad, actually. It's one of the things where the entire family has to eat the dish, or you'll have to sleep in the garage with the dog. But anyway, with this kind of technology, we've been able to select garlic that you can eat raw. It's 25% of the pungency of normal garlic. You can eat the leaf, you can eat the root, you can eat every part of the garlic plant, and it's super healthy because when you cook garlic, you lose many, many of the valuable things in it. But this is all done with science, so it's really not as random as it sounds.
Yeah, and I think that answers, we talked a little bit about this before the panel, but that answers the question of why is this not just random? But then the flip side of it is, why is it not the same outcome as GMO, and why is GMO so bad? And I think most of the pushback on GMO is like specific critiques, specific things like, okay, this is Roundup Ready, this is not natural, or this is using a gene that should never, it's never intended to be in a plant. But to your question, I think definitely there's probably opportunities to do this, not just with breeding, but probably synthetically also in a responsible way where you actually know what the long-term outcomes are going to be.
And are the Hampton Creek Foods guys running into a wall with people saying, like, what is this? You tell me it's an egg substitute, but here it's a powder. And so what are what are you counseling them to when they're bringing such an innovative product, and how are they going to get over the hump of people saying, this is just powder?
Yep, yeah, it is in powder form when it goes to the product, but what that powder comes from is just basically ground up pea. And so it's an all naturally occurring pea that exists in nature. They just grind it up, extract the proteins, and that's basically it. So non-GMO also.
Two-part question. First for Rob. So Whole Foods or Natural Foods as a retailer thinks they're the provider of local foods to consumers. Veritable Vegetables or Greenleaf think they're the provider as a distributor of local foods. So which of those are you disrupting? That's question one. And for everybody, food business is a huge business. What links in the chain are also ripe for disruption?
So the second question, food industry is a huge business. What links in the chain are there for disruption? Where is it broken? And the first question for Rob directly is, there are a number of players in this space. Whole Foods, veritable vegetables, they all think they're going to be the distributor of local foods to consumers. How are you distinguishing yourself from those providers today?
Yeah, so one of the things we did when we started out at Good Eggs was we actually didn't know what we were going to build, but we had our mission statement. We wanted to grow and sustain local food systems worldwide. And so the first thing we said, okay, how are we going to do that? What is a product or service we could build? And we started studying the local food landscape, and what you see is that there are tens of thousands of small food businesses that are trying to sell their product locally, directly. And then there are some subset of those, maybe 1,000 around the country, who have scaled up to be mid-sized food businesses. Maybe they have 20 to 50 employees or $5 to $10 million in sales. And they're still really focused on their local market. And they're making food with the same amount of integrity. Here in the Bay Area, we have a lot of them. You have Marin Sun Farms and Frog Hollow Farms and Cowrow Creamery. Maybe you've seen some of these products. And when we look at those 1,000 medium-scale local food businesses, where we wish there were 10,000 of them in the country, what we find is that all of them are doing their own distribution. And sometimes they're working with distributors for a small subset of their sales, but they have their own fleet of trucks. They have their own retail shops in some cases. They're setting up in person at farmers markets. They have CSAs where they're driving to the customer's house. And they're driving around to restaurants in the area and distributing directly. And in some cases, they have some of the products that go to Veritable Vegetable or to Whole Foods, but for the most part, they're their own business. And so we said, great, how can we enable more local food businesses to sell direct? And so we're not a distributor, although we are helping with the last mile to customers' homes. But we actually are working with farms and food makers who have their own trucks, and they're coming and dropping off at our center, at our food hub. Together, we want a collaboration of all those producers themselves to disrupt the existing supply chain, which consists of retailers like Whole Foods and distributors like UNFI or other kinds of major middlemen in the food industry. And then there's a lot of things we can say specifically about a company like Veritable Vegetable that probably esoteric to a lot of folks here, but that's kind of the answer. So Good Eggs is disrupting the whole supply chain.
Let's talk about disruption for the panel. This is a big, when we talk about food industry, you're a great panel to show some of the various aspects of it, but this is a big global industry. Where are the elements ready for disruption? Where are the weak spots? Where are the problem points that people can tap into?
I mean, I think you want to look at every piece of the stack of the value chain and try to look for these sleepy places where there's an incumbent that's not delighting the customer, that's ripe for disruption. At Catamount, one of our fastest growing investments is a food company called Revolution Foods, based in Oakland. Two female entrepreneurs right out of Haas Business School who decided to take on the food service industry for public schools. And this is not a sexy business. This is competing for government contracts for hot school lunches, and they built their own commissaries delivering natural, low ingredient count, healthy lunches for kids, replacing turkey tetrachloride and French fries as a vegetable and all that stuff. And they just crossed the 70 million lunches served, 75% of which went to free or reduced fee low-income kids. So just an unbelievable story. They're disrupting a really sleepy category that's run by companies that they're really logistics companies. Food is kind of an afterthought for them because they're focused on low cost of per lunch served and infrastructure of trucks and that sort of thing. And the Revolution Foods team really turned that upside down.
Yeah, the part of it that I'm probably most excited about is, like I said, the production side, adding to the population question. There's also the growth of the middle class, and these people want to eat meat, and maybe there's an opportunity to take the animal out of the loop and get literally an order of magnitude better yield.
Plants are like 10x more efficient at making calories than animal husbandry.
Or more. Yeah, you look at water consumption, land use, all these things. There's probably a huge opportunity there. There definitely are, and there's probably actual solutions to doing something awesome.
To add to that, go without theme in addition to no meat, I would say it's been very interesting to see what's happened with trans fats essentially being eliminated from products, and I keep waiting for the sugar backlash. I think we're having the alternative sugar backlash right now, where if you look at categories like diet soda, they're down significantly, and Coke and Pepsi are trying to figure out what to do. But it hasn't happened to sugar yet, and almost everything has sugar, some variety of corn, or I guess wheat in it. And I think there's just a huge, huge opportunity there for stevia or just natural products to fill the gap.
Oh, we're actually breeding tomatoes for natural sweetness so that you don't need to use sugar when you make tomato sauce. We did a deal with Barilla in Parma, Italy a couple of years ago where we entered a competition with tomato breeders, and they picked ours. And because this little tomato was so sweet, they could make their Barilla pasta sauce without any sugar or corn syrup. And I think that's where it's headed. With things, especially with corn syrup. You need to create vegetables that are sweet enough that you don't need to add corn syrup.
I'd just add that, just to build on the sugar theme, consumers are looking for simpler ingredient decks too. When you look on the back of a lot of these consumer packages, it's a laundry list of stuff, and people are becoming more and more aware of what they're putting in their body. Gluten sensitivity, and with the whole quantified self movement, people are getting blood tests. They know what they're allergic to. They're going to want targeted foods, foods that they can see what's on that back ingredient deck. It's got to be simple. And if we can provide those things and look at categories in the supermarket where there's too much stuff in there that doesn't need to be that complicated, and simplify it, I think there's a tremendous opportunity there.
Lady in the red shirt.
Hi, my name is Ivy. My company is called Local Food. So what we do is we are like Survey Monkey for CPG food brands, and we work with Newbie. And what we do is send out samples to our community of moms to get their feedback so that companies can use it for R&D. So everything we select is under the organic and all natural category. And people are starting to call our products healthy. And it's really a gray line, and it's very challenging for us to define what's healthy. So, like for example, we work with a goat farmer in Vermont, and we help them send out organic goat's milk caramel. That is definitely not healthy, but people call it healthy. So we're having a challenge. I'm not sure if you face that challenge on, how do people define healthy in all the products that you have funded or worked with.
So the question is really, I think a lot of you, I know Janica on your website, you talk about the healthy, sustainable living, and I think even on Catamount Ventures and maybe even on White Road Investments. I don't know if I've seen it on Founders Fund yet, but the use of the word of healthy, it's healthy. How is that being used in the industry? What's sort of some of the pitfalls? And how should entrepreneurs use that either to their advantage, or should they try to come up with a new approach?
Yeah, I don't know. I think this is a tricky one. It's all case by case. But just to underscore that point, when the movie Super Size Me came out, I had a concept for another movie I was going to call Super Size This. I was going to eat 4 pounds of carrots a day or more, and only carrots for a month, and see how bad the outcomes were. I think it might have been worse. So just because something's organic doesn't mean it's healthy, right? You need a balanced diet. You need good foods, food, exercise, water, and even sleep. So yeah, I think it's all case by case.
Yeah, we have a spectrum of approaches in our portfolio. I think first and foremost, we look for our entrepreneurs to have a strong and authentic point of view. And in the case of Revolution Foods, their products are not organic. They couldn't win these school contracts and hit the price points they need to hit with organic ingredients, but they are all natural, and they're fundamentally significantly healthier than the services they're replacing. And I think the company has a very transparent and authentic story and mission around that. In the cases of Numi and Plum, both of those companies drew a much more rigorous line where they said 100% of our SKUs are going to be 100% organic. And that's a promise that they make to their consumers. But that's not the only approach, right? I mean, Cliff has a lot of SKUs that are, I think, 70% organic, right, based on the oats, but not all the ingredients. And so I think transparency and authenticity is more important than trying to figure out how to play the kind of labeling game.
The gentleman in the blue beneath the camera.
I'd like to get your feedback a little bit on the value of ethical alignment with the consumers of these products. I mean, you've talked about Numi, you've talked about Plum, you've talked about 7th Generation, that's 3 B Corps, good eggs. Yeah. Obviously, there's a lot of value alignment with the consumer there. So I feel like that's the elephant in the room. I feel like that's where investors are going and that's where consumers are coming from, is their value alignment with the products that you're investing in. So maybe you could talk about that a little bit.
So it's more discussing about the value alignment proposition and whether you as investors approach that, and also whether there is an opportunity in the B Corp status. Delaware allows B Corps to be part of the corporate structure. So is there an opportunity there for companies in order to become a B Corp and become value aligned with the investment?
I don't want to hog the mic. That's a big deal for us. You know, I think it's self-selecting. We look for entrepreneurs and companies that are what we call mission-driven, that you know, some people talk about double bottom line businesses. For us, the definition is a business where their positive social impact is inherently baked into their business. So it's not a company that's selling widgets, but they're going to take 1% of the profits and move it over to a foundation or something like that. We look for businesses where as they grow revenue and profits, they're just naturally increasing the positive benefit to society. And a lot of our companies happen to be B Corps. I don't think the end consumer pays attention to that or notices that or accrues value in the B Corp piece, but I do think end consumers are getting smarter, and they do notice about the authentic promise of the brands that they're buying. So whether that's you know, a Tom Shoes or a Warby Parker that has a 1-for-1 model, or a Plum Organics that has a promise that, you know, it's going to be 100% organic, it's going to be 7 ingredients or less, and a mom can trust that and really builds a loyalty to that brand through the process. Numi's an interesting example where they've done a lot of work around fair trade certification. They're the largest fair trade tea importer in the U.S. You know, they're a small company, right, compared to these tea giants. So the fact that they're the largest fair trade importer is a really big deal. And you know, they actually have teams that go train growers in China and in India how to become fair trade. And they actually started their own kind of certification nonprofit to help certify. So they're really out on the extreme bleeding edge of trying to, you know, drive that, because it's a big part of their marketing and their promise to their customers.
Rob, how does the mission, when you talk about the mission driving, is it parallel with the B Corp line of thinking, and was that really an important piece of it for you, or how did you approach that?
Yeah, as an entrepreneur and as the team that set out to build Good Eggs, our goal was to grow and sustain local food systems worldwide, because that's the world we want to live in, and that's we think has tremendous social and environmental benefit. And that's how we're building the company, and that's how we're measuring our success. The reason we're entrepreneurs is to affect that change in the world. I think a lot of our customers see that, and it resonates with them, and a lot of our customers are looking for the same kind of change in the world, and they're wondering how they can participate, and maybe they can participate as a shopper in the system or as a producer in the system. but they also want to see that world take effect. As far as the question of B Corp, it's something that we're really curious about and don't know enough about.
And Deven, does it make a difference to you in looking at a company as to whether it's a B Corp or whether it's not, it hasn't achieved or hasn't decided to go in that designation route?
Not specifically B Corp, but we've looked at B Corp at Cliff Bar for a number of years and have just not signed up yet, primarily because we said, hey, we're doing a lot of these things already, so why do we need to get certified that way? But back to the question, I think that connection that you made with the consumer is, it's not just the product, it is the values that company has. There is emotional connections that people have to brands, and it's based on what those companies do, how they show themselves out in the world. A quick example from Cliff Bar, in 2000 or early 2000s, we made the decision to go organic well before that was something that a lot of people were focused on. Primarily because Gary, our founder, said it's the right thing to do because it's better for the environment, it's healthier food, and this is the direction we want to go in. And we did it in an environment where we had a significant amount of debt on our balance sheet, we were close to breaking covenants with our bank, and we invested a lot of money in our raw materials because it was the right thing to do. We made it through that period. And Gary would be the first one to tell you that we wouldn't be the size we are today had we not made that investment back then, because it is something that consumers value significantly. So trusting your gut and doing the right thing and all those connections with consumers matter a tremendous amount.
Lady in the...
I was wondering if any of you connected with any organizations addressing the Farm Bill and the issues that policy directions it would take in to help level the playing field and make it a fair environment for the kind of businesses that you're trying to support. Without their Sustainable Business Alliance, are they doing that work?
So the question goes to at what level do your companies, whether they be venture funds or the actual companies, intersect with politics? And there's the Farm Bill being discussed in Congress. How involved are you in that process? How much do you watch it? What sort of impact does it have? And are there other players in this industry that are actively involved in it?
As far as politics goes, we usually try and impact that through our companies. And so there's a lot of pieces to the Farm Bill. One piece is federal crop insurance. And so we do have one company called Planet Corporation that's doing crop insurance for farmers that's data-based and actually weather-based. So what they do is they take all the weather data from present. They take 15, 30 years of old weather data and crop yields, and then they're able to say, here's what we think, actually taking 15 to 30 years of crop yields and the actual weather and the soil type, and creating a huge model around that and saying, okay, for this weather in this place, we expect this amount of crop production. And they're able to create insurance products around that for farmers so that the farmers can more effectively know what, at the end of the day, is going to be their profit. So, that can ultimately tie back into pieces of the Farm Bill, and I know that the company is very interested in doing as much as they can to support farmers in that way. So, I think for us, we don't have regulatory people on staff. We don't take a really active role in politics, but we like to see it when our companies have a clear vision of what they want in the future and doing something about that.
The Farm Bill has huge impact on the industry, and it has huge impact on the producers in the space, and it's absolutely bogus how little voice the small producers have in that debate, and how outsized the voice is on behalf of the large corporations, in many cases private corporations, who are acting for their bottom line, their single bottom line. It's really upsetting. At Good Eggs, we aspire to have a voice in that debate and have a way to represent the small farmers. We're not there yet, but it requires some scale. We're really pleased to see the cottage food laws passed in California and in states around the country. It's a set of laws that are benefiting small producers in a meaningful way, and it's already having an impact on our business. Good Eggs.
Anyone else? All right, gentleman in the back in this green.
Hi, my name is Michael. I'd like to thank the panel for coming out today and teaching us. My question is, I'm from Gulfshire. We're a company that mix technology and restaurants together. My question is for just general startup, what kind of people should you surround yourself with to get the energy, to get the momentum, the traction that you need to get to the market and show value to the investors?
So the question is, how do you build your team? Who makes up that team? What's the sort of team that needs to surround you in order to build that? I mean, Tony, you talked about hiring people that are smarter than you, sort of driving. It's a little hard, but I can stretch my mind and imagine it. But how did you select the team that you helped grow the company with?
Well, when we look at companies to buy, and as I said, we're acquiring companies. We've got 9 deals in due diligence now, and when I go in and try to talk to somebody and sell them a business, our first thing is we're adding people, we need people. But we're looking for smart people, people with the right educations for what we're doing, but also we do like to bring people in from other industries. It's great to do that. We bring people in from, not only we love to hire people from our competition, but we like to hire people, now we're looking for people from the food industry who understand produce marketing, who understand the food business, because in the seed business it's very different. I started life as an international corporate lawyer in New York City and San Francisco, and I ended up in the seed business. And so I'm very open to bringing people in from other industries. But again, we look for the best and the brightest. We go to the good schools, we go to the big companies, and we like hiring people of all ages. We often keep people that other people would discard. We bought some companies where the entrepreneurs who started the businesses are now in their late 70s. And I've said to 2 of these gentlemen, I said, we want you to stay until you're 120. After that, you're on your own. But, and we believe in that. We like people of all ages because you'd be surprised at, well, you probably wouldn't be surprised if any of you have grandparents, but the interaction between the older folks and the recent college graduates is just fantastic. And we do a lot of that. So it's just a matter of and we also, I have a no jerk policy. And I state that, it's in our mission statement. If you're a jerk, you're out. I don't care if you're our biggest salesman. I don't care if you're the best talker, or if you're a jerk, if you're rude to people, or any of those things. We all know what a jerk is. You're out. And that helps a lot, and everybody knows that, because the psychic damage that a person like that can do is beyond comprehension and beyond putting a number on. So if you follow those simple rules, you'll build a good team.
Should we move to Palo Alto?
So Rob, how have you built your team, and did you pull some people from Google, or how did you build the core? And then I find with our entrepreneurs, sometimes the challenge is moving beyond the core and starting to build the 4th, the 5th, and the 20th employee.
That's excellent advice. We're actually hiring pretty aggressively right now. We're 72 in the team and hiring on all cylinders. And I think we use a lot of the things that everybody uses when they're hiring. To hire people that are smarter than you and people who are nice people. We're also looking for people who are genuinely motivated by our mission. That prior to even hearing about Good Eggs is something that was important for them in their lives. And we find that those are the folks who really approach the work with the right kind of passion that we all share already on the team.
And Janica, thinking about how deal teams look in the transaction, with the transaction that goes really smoothly, how much of that is the team that actually drives that? I mean, what sort of qualities of a good team do you see actually have an impact on transaction success?
I think you've heard the investors at the table here say that team is often most important. So the stronger our teams are, the better the transactions seem to be, because even at a larger scale, when we're doing transactions of significant sizes, to some extent, investors or buyers can still be betting on the bus driver. So we love it when we see teams that communicate. So team players, no sort of hired hitmen doing shotgun approach, and love just open, honest, direct, where people say what's on their mind, but speak appropriately, and everybody is in the loop. The investors will be able to sense that immediately.
So for the investors, you may work with some companies that come to you at the size of 3. What sort of guidance do you give when they start scaling up as to, the question asks how they build. Where should they look? You know, should they look at the people they've already met? Should they be going to job fairs? You know, what should they be doing?
I think a lot of good advice has already been said. I would just add, look for people that can wear the shoes of your customer and that authentically believe in your product. If you're building a pea protein-based alternative meat company, don't hire the rock star sales guy that barbecues pork ribs every weekend. You know, get people that really understand your product and your customer.
Lady in the pink.
I have two questions. One for the VCs. Have you run into any interesting food safety companies, ideas, technology, to prevent contamination of the food chain? And the second one is to Rob. As Amazon, if Amazon gets into the food distribution in a big way, how do you see that impacting your business?
So the first question for the VCs is whether you've seen anything exciting in the food safety space. And then the second question for Rob is the Amazon of local foods. If Amazon starts doing local foods, you know, where do you see some of the challenges surrounding that?
On the food safety side, one company that we've invested in is called Palantir, and it's a big data analysis platform. They have done work in the food safety space, pinpointing the source of, I think it was an E. coli outbreak at one point. So there's the data side. Have actually met with a few companies that are doing things on the diagnostic side. So I think there's some interesting things going on there, which happy to talk about after the panel.
The only one I'll add is the one Janica had mentioned earlier. We're seeing more and more the HPP technology, the high pressure pasteurization. People want kind of raw type of ingredients, but with the food safety that needs to be mitigated with those raw foods. Simple ingredients, good for you, nutritious, and then HPP seems to meet that. So that's something we're seeing more and more.
And so Rob, in terms of becoming the Amazon of local foods, does Amazon wake you up at night in terms of concern?
Yeah, so I definitely don't think about Good Eggs as the Amazon of local food. Amazon especially has this big global brand that comes in and crushes local independent businesses. We're very much the opposite of that. We're enabling local businesses and we want to see them thrive. And then just as far as how Amazon works, I mean, I guess there's a similarity in that there's a retail kind of interface on the website, but like I said, Amazon buys things wholesale and then resells them for the most part of their business. And Good Eggs is a totally different supply chain. It's about the direct sale from the producer to the shopper.
Or like eBay, maybe, for the little independent stuff.
More like eBay, yeah. So Amazon will be launching Amazon Fresh in the Bay Area this fall. And we actually don't think too much about it because for us, Amazon Fresh is very much like the conventional grocers out there. And it'll compete with Safeway and it'll compete with maybe even Whole Foods, but likely not with Good Eggs because what's so cool about Good Eggs is that you're connecting directly to the producers. They'll be buying food wholesale from big distributors and huge international suppliers. We're making food in enormous laboratory factories in the Midwest. And then they'll be selling it online, but that's where the parallel stop.
Can you talk about your business model?
Yeah. So Good Eggs takes 25% of every sale, and we use that revenue to power the infrastructure behind it. So part of that is digital infrastructure, and a lot of it is physical infrastructure. So our major expenses, we're an operational company, so we have our food hubs, and folks are working in those food hubs, and they're driving Good Eggs trucks to deliver food. We also have a way in our platform to let producers sell direct for their own fulfillment, where they're going to drop off, or you're going to go pick up at the farm, and that's a much lower percentage commission, which is really all about the technology infrastructure that we're providing there. And we're looking to help these small businesses thrive in different ways, whether we're doing the food hub and trucks or whatever they are. And so the business is entirely, our incentives are entirely aligned with the producers. So there's no surcharges, there's no setup fees, it's just a percentage of sales. We win when they win.
You're also acting as a payment agent for the farmers, right?
That's right, yeah, we basically accept payment on our site and do weekly payouts to farmers on our platform.
So it's actually, we're there in terms of time, and I want to expect people to say, I want to join me in thanking the great panel and all the